You're listening to Mind Over Markets, a podcast on trading psychology to help you build a bulletproof mindset. Here's your hosts, George Papazov and Mark Borscht.
Prop firms that exist even to this day have a relationship with each one of the traders. So other than just the result, there's three factors you usually look at in people. It's their seniority, all right, the volatility, and the trust that they have with each trader in a professional firm. And they look at these three things specifically when they're trying to assess whether or not that trader is going to be able to trade after hitting a stop loss. So let me give you an example. Let's say it's we're going to unpack each three of these. Let's say you're a trader who just started out with the firm. You're brand new, 3 months, you're funded, you're doing okay, but it's your third month at the prop firm. And so there's a day that you suddenly hit your stop loss and you max out, let's say, $1,000 loss for the day. You go to your risk manager and you ask the risk manager, can you reset my stop loss? I want to get back to this. I think I can make back my day. Can you please do it? When they're answering that question, that's the three factors you're going to look at. How long have you been around? For a new trader who is maybe just starting their journey, that risk manager will ask them a lot of questions. And we're going to get into those questions before they reset it. But if you're somebody who's been with the firm for 3-4 years and you're earning consistent returns, your seniority, the fact that you've been doing this for so long, the fact you've experienced so many cycles, and you're even asking, the fact you've decided yourself that you want to even approach the risk manager to reset your stop loss is a really big thing. And so that's the seniority aspect of it. The second thing is the volatility. In a firm, if they're going to allow you to take their capital and continue to risk it after you've hit a negative loss, there's got to be an opportunity. So it's also the context of the market. If it's a slow day and you've done 30 trades and you've maxed out your loss for the day, it's a very low likelihood that they're going to go ahead and say, yeah, go ahead and do it again, generate some more losses for us. But if the market volatility is high, then there's an opportunity. So in essence, the play is the person, how long have they been around? And then the second part is the volatility. Is there enough opportunity in the market for you to come back? And then the last part of that is the trust. Do they trust the person? Ultimately, it comes down to, look, you've had a tough day. You've hit your maximum loss. Is there a trust factor that you could come back? And I think that's what it boils down to. And we could speak on this from our own personal experiences, Mark. The tough part about doing this independently is if you have no one to talk to. If you're at home alone, you may not even have a maximum loss scenario. The first thing you should learn is you got to have a maximum amount of money you're willing to lose every single day. Do you have that, Mark, as part of your plan?
Yes, sir.
Me too. I have like a maximum drawdown, right? And when I hit that drawdown, the question is, should I continue to go? The meaning, should I increase my drawdown for the day? Or should I just call it? And that's really the whole topic of this episode. And so it matters on your experience and the market opportunity. Those are the two things it boils down to. And in any professional environment, that's how they would assess it, who you are and what the market condition is.
Yeah, exactly. So I'm glad that you shared it from the professional angle, seeing how the prop firms would allow their senior traders or the more seniored traders, if you will, to allow them to reset their stops and continue on if there's opportunity. So I think some of the audience might be wondering how this can apply to their own trading, right? How can we apply this to our own trading strategies? How can we use these kinds of tricks, if you will, to keep more money in our accounts and to take us away from the market when it's really time to do so. And really, before we speak on those two factors, I think we can open this up to an interesting discussion and seeing where this might be able to take us based on our own two journeys, right? So you kind of mentioned before the importance of having somewhat of a risk manager or other trading partners, kind of like in the prop firm. Right. And so I know from my own personal experience, if you guys have been listening to this podcast or the prior episodes, you'll know that I've had a couple of, one day in particular where I had a whole bunch of trades. And I remember that day was 60 odd trades or so. And I remember that day specifically because I was in the office, but you two weren't there. And that was the one day I was alone.
I remember this day.
Yeah. And I couldn't share I couldn't share my feedback with anything. I couldn't really share emotions with anybody in the office, and that kind of threw me off the game. And I started to trade emotionally that day, and so I didn't have. I didn't. I should have walked away, but I didn't because I didn't ask myself the questions that we're going to get into here. So I think it's important to also note that fact with from our own experiences how community has been able to help us with our own way that we put together and actually go through these strategies.
Yeah, but that's fascinating because like all that boils down to it. It's fascinating to me that the day that you had that was the worst, I don't, not in terms of results, but the most amount of trades was the day that you were alone, right? And when you think about how many people in this industry do this alone, the fact of the matter is it's a very small percentage of people who get to experience this with people around them in person. Let it like so the next best thing is to experience it with people around you in an online community because what's important about you trading with other people? It starts with an A, accountability, right? It's that accountability. It's the if when you're doing something by yourself and you don't have to report it to anyone. There's no accountability. You don't need to give an explanation to anyone. All right. You don't have to even show them. And you can kind of get over it and say, oh, well, act like it didn't happen. And I think that's the most dangerous thing that you could do when you hit a day where you've lost your maximum allotted amount of money. Because number one, most people don't even have a maximum drawdown. Their maximum drawdown is their whole account, which is a huge problem. Right. Number two, when you do hit the drawdown, if you can't talk to anyone, if you can't bounce ideas off anyone, then ultimately you're sort of it almost feels like you're doing something illegal in your corner. It's like you're getting away with it, but you're not getting away with it. And what you're actually doing is creating negative patterns. You're creating a very dangerous uh, pattern that is going to repeat until you get yourself into a lot of trouble. And so I think this is really the benefit is having somebody around you because when we work a 9 to 5 job, when we do something for someone else, we have accountability. We're forced to do reports, touch bases, like show me progress. Where are you at with this? When we're doing it with ourselves, we lose that. And I think it's important that we don't lose it because it could lead to enormous losses.
Yeah, exactly. Thanks for bringing that up, Georgie. And exactly what George just mentioned there, as far as people in corporate jobs in 9 to 5, you might not be used to speaking to yourself like a boss, right? With trading, in order to be successful, you've kind of got to develop a split persona, if you will. You've got to have one side of you that can be the employee and one side of you that can be the boss. And you've got to be honest with yourself, honest and raw with yourself, because if you're not, that's what's going to get you in trouble. And so, to George's point, many people are reporting to bosses. They're getting regular checkups with their bosses on progress reports, et cetera, on projects. And so they've kind of distanced themselves from that accountability. Whereas with trading, you've got to accept that accountability. You've got to live that accountability, right? And so, like I said, you've almost got to split yourself into two, where you're a boss and an employee, and you're able to really be disciplined with yourself, be honest with yourself, and you've got to be able to actually apply the rules that you've given yourself, right? So apply that, and you've got to be able to be accountable to yourself when you don't follow those rules.
Absolutely. And well, hey, Mark, here's a question for you. When you first started trading at the beginning, when you first started live trading, it was probably swing trading currencies, knowing your past. But did you tell anyone about it?
It was actually pretty quiet about it until I started doing pretty good with it. Yeah, so it was pretty quiet, and the only people I'd really bring it up to is if I was ever out in public at Starbucks or anything, just looking at charts. And some people would be curious minds and would come over and ask, but for the majority of it, it was relatively quiet.
There's nothing that gets attention like looking at charts at Starbucks. If there's any single males out there listening or females, if you're single and you want attention, go to Starbucks, your laptop. That's actually how I met Victorio's dad. And then how I came to meet Victorio afterwards. So, the reason I asked you that, Marky, is because for me, I didn't tell anyone. And, you know, first of all, I did tell people, but nobody cared. What they cared about is where's your Lamborghini? Or like
Yeah, yeah.
I couldn't have a meaningful discussion with them. So I stopped telling people. I'm kind of the person that likes to share things because the more I put it out into the universe, the more accountability I have to now have. And it's like, if something's great, I don't want to keep it a secret. I want to let people in on it. But I would tell people who didn't care. And so I wasn't able to get any good discussion. And when I found the community when I was trading, I found a community. It was Anthony Drager. I joined his trading room. And being able to share with people that cared really made me learn a lot of things, change my strategy quite a bit, and have an outlet. It's important to have somebody to talk to about this stuff.
Thanks for listening to the Mind Over Market podcast. You can find us at tradeproacademy.com.